Want to improve your trading game? Say hi to your trusted crypto co-pilot, Profit Farmers. Copy expert trading signals into your own Binance account. Just log into Profit Farmers, pick a signal, insert your trade amount, and choose to modify the trade setup as you'd like. From here, your co-pilot automatically executes your entry, target, and stop loss in your own Binance account. Benefit from copy trading, advanced tools, and crypto signals with over 75% win rate month after month. Profit Farmers Crypto Co-Pilot, more gains, less hassle.
A one-stop shop for cryptocurrencies and digital securities. When others ran from regulators, we found a way to work with the biggest. The crypto trading powerhouse that brought you the first SEC-registered security token IPO offered to the general public is now ready for the ultimate bulls versus bears showdown. The question is, are you? Apply now at inx.co.
A huge thanks to our sponsors at the Crypto Mastery Summit. Profit Farmers is a partnership sponsor, and they do crypto copy trading with 75% win rate. Right now, Summit attendees can get $150 off any membership package on profitfarmers.com/CMS. A big thanks to our partnership sponsor, INX. Do safe and solid trading with the first SEC-registered crypto trading platform, INX. A big thanks to our elite sponsor, Celsius. Join a community of over 1 million users and earn up to 17% APY on your crypto. A big thanks to our elite sponsor, Emberly. Make your daily crypto payments easy and fast. Do instant crypto payments and withdrawals with major cryptocurrencies coverage and premium 24/7 support. Order a plastic card and get a 25-euro deposit plus free delivery. A big thanks to our elite sponsor, Beam. Confidential DeFi platform bringing privacy to dApps running on top of private by default blockchain. Beam is about to launch the BeamX token, which will govern an ecosystem of dApps and eventually Beam protocol. Beam will launch a risk-free staking campaign in the coming weeks. A big thanks to our VIP sponsor, Trailing Crypto. Create advanced order types using bot assistance with Trailing Crypto's trading terminal. It integrates with most exchanges and you can get a free account today. Check out the sponsors in the sponsors section. Thank you so much. Hello guys, and welcome back here at the Crypto Master Summit. Today we have Alex Nascimento join us, and he is the best-selling author and blockchain faculty. I think I'm just going to skip that word entirely. Here we go again. 3, 2, 1. Hello guys, welcome back here at the Crypto Master Summit. Today we have Alex Nascimento join us, and he is a best-selling author, and he also lectures on blockchain business applications and security tokens at UCLA. And in addition to this, he actually also is a managing director of an investment company called 7cc. And that's a blockchain investments company who's focused on supporting and fostering the blockchain industry. So Alex, I know you have a lot of good things to share today. Do you just want to say hi to the audience?
Hi, everyone. My name is Alex Nascimento. Thanks, Christopher, for having me here. It's a pleasure to be at the Crypto Mastery Summit. Very excited to share some of the latest things we've been seeing on the security token space, which for those of you who are not familiar with the term, is a token generating event fully regulated by securities regulators, such as the SEC in the United States.
Mm-hmm. Yeah, that's great. So yeah, Alex, you explained me a bit of his backstory just before, and I think you might also be going into that now, Alex. But basically, he's been in the space for a while, been speaking with the early Ethereum people and MetaMask people, and got into the space back in 2016, right?
Yep.
And I hope that you can just share some good things now with the audience, which they're going to find interesting. And then by the end of this, I'll be asking you some questions.
Excellent. So we're going to start a little bit about, smart contracts, what an ICO versus an STO is. I know everyone here in this audience know what a smart contract is, so we'll go fairly fast through those concepts, but just why a smart contract is important for a security token and for a financial contract and a financial investment contract, right? We're going to go over some of the key benefits of a security token. Why is it relevant for key institutional players like banks, hedge funds, pension funds, and other large financial regulated institution? A little bit about the crypto asset classification framework in different markets. Like I mentioned in the beginning here, each market has its own securities regulator. So if you're going to issue shares in the Philippines, it's different than issuing shares for a company in the US. And that's a little bit about this kind of like balance for institutional players is how can you take a technology that it's global like blockchain and utilize it to issue investment contracts or securities that are mainly locally regulated, right? A little bit about the historical transition from what we saw in 2017 ICOs to what are now digital securities and how that impacted the market. A lot of what we've been seeing of institutional adoption, the price of Bitcoin being at 46 and hitting 64, my friend, it was not because of us enthusiasts. It is certainly because big money from big players are entering in the space. What I think about the future, and we can run through a little bit of an exercise if we have time, or just, a walk through the framework of how do you want to think about issuing a security token. So if you have a company, if you have a industrial plant, if you have a hotel, or if you have a restaurant and you want to issue a token that's representative of the economic interests in that venture of yours, this little exercise will give you a little bit of a framework of how to go through it, right? So cool, interesting stuff here. So like Christopher said, my name is Alex Nascimento. I've been teaching at UCLA for over a decade. I started the UCLA Blockchain Lab, now called Blockchain at UCLA, which is north of 400 students. Our focus here is to educate. I've always been in tech and tech investments. And we ended up writing this book, The STO Financial Revolution, which I'll give you guys a code for you to download it for free here if you're watching us at the Crypto Mastery Summit, so that you can understand a little bit more about this. The whole idea of the book is to demystify the technical jargon. So you don't need to be a coder, you don't need to be a tech developer to understand the concepts of tokens and how tokenization of real assets is changing the way we see the financial industry as a whole. Here's the book. On the later slide, I'll pull the slide again, but you can go here to the website and put the code all caps STO book -CMS, and you got the book for free. And what do we do, right? I teach at UCLA, but at the firm, we invest in security tokens and blockchain projects. I've been seeing some great innovations of blockchain projects, from like fantasy games to tokenizing Bitcoin mines. So if you're interested in that, and happy to continue this conversation either on LinkedIn, you can find me on LinkedIn, Alex Nascimento UCLA, or on Instagram as 7cc Invest. We do a lot of research and provide blockchain services for security tokens, how to issue tokens, and we advise investors and companies on how to enter the space, especially institutional investors, but we also do a lot of work with startups. So if you have an idea, happy to have a chat. Little disclaimer, mainly because I'm American as well, but so that you know to do your own research, right? I'm not a lawyer, and I do not intend to provide any legal advice. So please, if you think about issuing a token, for your own good and safety, seek a legal counsel at your jurisdiction before even thinking about it. Right? Very important, very important. You don't want to be in the trouble with the law. So smart contracts, right? Everyone in this audience already probably knows a smart contract, but why a smart contract is relevant in this space? So you have safety, right? For institutional investors, very important. You can provide trust between parties. So if I'm investing in your restaurant, I want to make sure that I can trust you across the world. You're in the Philippines. I haven't met you, but I want to invest in you because I like your idea of a new restaurant. So that trust is very important. The speed and the ability to make these transactions are a breakthrough, because imagine me investing in a restaurant in the Philippines, like a chain of restaurants, and having to do that on paper and pen. Almost impossible. You have all the backup, so things can be backed up. So even if I lose some of the documentations, if it's an investment contract that's stored in the blockchain, we know about the immutability of that digital file. And you obviously have accuracy, right? Because smart contracts are self-executing, you minimize human error. And obviously savings. Savings is the hugest piece and why is the main driver of institutional adoption of blockchain. An average bank will spend about $6 billion to $10 billion on back office work, which is mainly like track record, bookkeeping, transaction, and all that can be significantly reduced with smart contracts. So although I know everybody here knows about smart contracts, just wanted to give you a context of why smart contracts are changing institutional finance. So a little bit about the history of how we got here, right? In 2017, you may all remember there was this big boom of ICOs. Companies were issuing tokens, raising money via an initial coin offering. And then early 2018, through a series of, let's call it unregulated token offerings to the US user base or crypto enthusiast community, the SEC, the Securities Exchange Commission in the United States, came out and said potentially every ICO is an unregulated security. And that, in my opinion, was the main trickling effect that created crypto winter. Because some of you might not know this, but there's two factors there, right? The US accounts for about 40% of all equities and bonds traded in the world. So if you are an institutional player, you want to make sure that you comply with the big gorilla sitting in the room and the regulator behind that gorilla, right, which is the SEC. The other very interesting aspect of it is the SEC does not have a statute of limitation. If you issue something that is fraudulent as a security, the SEC can come after you 10 years from now, 5 years from now, 50 years from now. And if you end up living 100 years, at the 100th year after your ICO, if it's unregulated, you could receive an indictment from the SEC and face legal repercussions. So that, in my opinion, was the big driver of the meltdown of Bitcoin in 2018. A lot of uncertainty in the market, right? So where is the difference here? An ICO, technically, or a utility token, should only be a token that gives you access to something, right? I use this metaphor here for those of you who have been to Disney World and are probably old as I am. You had Disney dollars, right? That didn't increase in value. You just had like a fantasy dollar there that you could access a roller coaster or buy an ice cream, but mainly have access to Disneyland, which is completely different than a security token, which is a token that's designed to increase in value or represents the economic interest of us investors into the company, a Disney stock. Actually, many of you have not seen this, but if you, like, again, if you're old as I am, this is what you used to receive at home when you bought Disney stock, like a nice piece of paper that said, you know, this is worth a share of the company. So this is the mainly difference between a utility and a security token, right? Security token should be an investment, should be regulated. A utility token just gives you access. Some of the key benefits of a security token is, like I mentioned, cost reduction, a much faster settlement between parties, and automated compliance, knowing who are the parties involved in that transaction. You obviously can do revenue shares. Some of the things that I share around the world when I go and do these keynotes, and some people are like, wow, this is surprising. In a country like the United States, only about 3,000 companies issue dividends. Why is that? Is because the paperwork for you to issue dividends is very costly. So unless you're a big company, it's really hard for you to issue dividends. But you can also do startup fundraising as a startup. Security tokens have a much lower risk of redemption, right? So if liquidity is easier to access because you could distribute them around the world. You have an advantage of having a secondary liquidity. If you buy a share into a new venture, you could probably sell it in the secondary market. there is an array of different security token exchanges popping all around the world. Shout out to my friends at T0, my friends at Archax in London, T0 in the US, which is now just issuing the Exodus wallet security token, which is a very interesting piece of technology. The guys at iStocks in Asia, there's a bunch of security token exchanges popping around the world. Obviously, like any other thing in crypto, you have 24/7 markets, which is very exciting. And you can facilitate the transfer of ownership, right? Because you got automated cap tables when you buy and sell security tokens. You don't need the T+2 or T+3 that happens in the traditional market. Here's a little bit of like, gives you a framework of what's happening in certain markets, right? Certain markets considered Bitcoin and Ethereum a commodity, like in the US. In other markets, they're a currency. Some markets, like Singapore, considered STOs a viable product. Some other markets, like China, don't consider it STOs even as a financial asset. So Cayman, Singapore, Switzerland, even in the US, now we have very clear regulations and frameworks about how a security token should be treated and what are the necessary requirements to issue one, which was very different than when we started looking at the space in early 2018. Here's a little bit of the history of what brought us to having security tokens. The scandal that I was mentioning that happened in the US was the DAO scandal that happened in 2017. That was followed by the Munchie scandal. Then Bitcoin became a commodity in September of 2018. That's like almost 2 years afterwards, right? Then Props and Blockstack, shout out to my friend Adi Seidman from Props, were the first security tokens to be issued in the US. And then as you saw moving forward, we're having a bigger adoption of institutional players, including the Office of Controller Currency, which now allows US banks to hold stable coins, the SEC establishing an improved process, Binance offering digital securities. You can buy representations of Tesla on Binance, and obviously FTX is a leader in the space. And now Taurus received the license to operate as an independent regulated marketplace for digital assets. So very interesting evolution in this past 3-4 years. We still see a lot of problems here. And what are the problems here? The problem is the lack of liquidity, right? It's easier for you to trade crypto on Binance, just utility tokens back and forth, than for you to go through all the troubles of buying a security. And the unclear regulatory framework around the world also doesn't help. But the opportunity on the other side is to increase the global equities volume, which is, represented 39% in the US, and as well as the bonds, and offer that to the 4 billion plus people that are connected to the internet. Here are some of the trends we're seeing. REIT BZ from BTG Pactual, leading investment bank in Brazil, distributed dividends to its first security token, which was tied to real estate. NASDAQ, which is a famous player in the institutional world, I guess everyone here knows NASDAQ, enters the crypto market and has a full-fledged solution for security tokens. And security tokens are now almost 700 million, right, as a market cap, which is small compared to like Bitcoin and Ethereum. But you want to think this as like, this is a growing market, which is projected to be at 13 trillion by 2025, as banks and institutions are entering at a fast pace in this market, and they need to operate in the security token space because they're regulated institutions. Here are some of the case studies, that we've been seeing. One of the famous first ones was the St. Regis Aspen, which was tokenized, the famous hotel in Aspen, which was tokenized by the team of Solid Block, which is led by EIL. Great team there. We're seeing T0, which is the security token exchange in the US, significantly grow its volume. Polymath and the team for Polymash are doing a great work in evolving the back end of a security token, all the infrastructure. You have the Swiss Stock Exchange issuing their digital exchange, which is under the main Swiss Stock Exchange to only trade security tokens among banks. And like I said, NASDAQ entering in the space and being a service offering. Institutional money is coming. When I say that, it's not a joke. We saw that starting with Tezos, moving into some of the former banks like HSBC, Citigroup, Merrill. Silvergate is a bank here in the US that now deals with crypto. And you're seeing like the S&P 500 creating a crypto index, JP Morgan telling clients that they recommend that they invest in Bitcoin, although Jimmy Dimon was opposed to it in the beginning, and multi-coin capital raising 100 million for crypto startups. So a lot is happening in the space, and a lot of institutional money is coming in, right? What I think the future lies ahead of us is that we're going to have a lot of STO financing, especially the merge of institutional and DeFi with yield bouncing and yield arbitrage around the world, exchange listings where you're going to be able to buy tokens from startups and real estate and a variety of different hard assets or real assets that are being tokenized as we speak, a much higher liquidity and much clearer regulation. I talk about this a lot. I think that security tokens follow Amaro's law, which tells us that we tend to overestimate the effects of a technology on the short run and underestimate it on the long run. So I think that security tokens are a mid to long-term play, and potentially every real asset that's worth investing is going to be tokenized. I have a little bit of an exercise here just to give you guys a framework about how you think about this. So follow along. So if you want to tokenize something, right? First thing you want to ask is what type of financial product I want to develop and tokenize. Is it an equity play? Is it a economic play? Is it a dividend play? Is it a bond? Is it a debt token? Like, what am I trying to tokenize, right? And that creates my asset business plan. Second thing you want to go for is what are the regulatory implications and security laws among different jurisdictions? So if you're going to issue a security token in the US, is a different set of laws than if you are going to issue it in the Philippines. And more than that, if you're going to sell to US investors, you need to comply with US securities law. And if you're going to sell to Filipino investors, likewise, you need to comply with Philippine securities law. And that's where you're going to need to have legal support. And one of the things I point out here is just don't have legal support only where you're issuing it. Have legal support also where are you marketing it and where are you selling it, right? The third thing you want to ask is, what are the token features? Is it going to pay me a dividend? Is it going to just give me economic interest in a Bitcoin mine? Is it just going to be an equity play or an equity representation into a company like Apple, right? What are the features in that token? And then you're going to do the token development via a security token, via a security token platform. At 7cc, we have our security token platform. If you're interested in tokenizing a real asset, let us know. It'll be a pleasure to chat with you. Now, the other thing is, what characteristics of a token sale are you going to do? Are you going to have a pre-sale, a post-sale? Is it just going to be a public sale? Like, how you're going to break that down to drive interest? Are you going to bring anchor investors in the beginning, or are you going to just do a public sale afterwards, right? What I recommend is probably get some anchor investors in the beginning so that you prove you have a concept that it's valued by smart money or people that live by doing this. and then move into a public sale. Now, you're going to have investors relationship, do know your client and anti-money laundering procedures on everyone. And that's a little bit of a friction there because, right, people need to provide a lot of documents. And you're going to have custody because this is security, you need third-party custody. After you do that, you're going to have to list the token. So which exchanges around the world that list security tokens are you going to list your token? And that's a lot of interactions of these exchanges and listing costs. After you finalize all that, don't forget about the very important piece here, which is market making your token, right? Market making your token means that you, at every point in time in a 24/7 environment, you're giving a bid and an ask price, right? So that somebody tries to sell the token at 10, they can sell the token at 10. It doesn't help you that if they try to sell the token at 10, nobody buys it, they now are trying to sell it at 9. Nobody buys it, it goes to 8. And the next thing you know, it goes to 0, right? So you need a market maker, right? And you have that fiduciary responsibility with your investors. And then the 7th step here, because we like to think about things in 7, is that you have to do marketing and PR throughout that entire process, right? And there's a lot of great service providers out there. I'm sure the guys at Crypto Mastery can suggest a bunch of providers in the Philippines. You need a good marketing team to promote your investment contract. Little piece of advice just for us to conclude here and goes to question is reporting of who are your investors is the most important thing for you when you're issuing a security token. It is your responsibility to know who is investing in you. If you have someone who's in, a bad actor and he's in your cap table, that is your responsibility. So make sure you know that, right? And obviously hire a lawyer across all the jurisdictions that you are operating so that you make sure that you comply with the law because, like we said in the beginning, this is a regulated security, a regulated investment contract. Here's the code again for the book. If you missed it in the beginning, here's my email. Feel free to email me. You can find me on LinkedIn, Alex Nascimento, UCLA. I'm a little black and white picture. Or you can find me on Instagram, 7cc Invest. And you can go down here to the STOfinancialrevolution.com, put in the code STO book -CMS, all caps, and you can get the book for free. And I would like to thank you very much for listening. And maybe now we can jump into a Q&A, Christopher.
Sure. Thank you so much, Alex. That's really, really nice. And I especially like your last little framework or exercise with the 7 steps, which you've shown us.
Yeah, all right. That makes it easier.
It does. It makes it visual. And also your book, people should definitely pick that up. You guys are getting it for free, right? And there'll be a lot of good information in there. I wanted to ask you a question in regards to how much time this process of setting up an STO usually takes.
This is a very good question, right? The real answer is that it's mainly dependent on the issuer. Because you're issuing something that must be regulated, there is a lot of compliance on like who is issuing it, right? You don't want someone who's on a terrorist list to be issuing a security in the United States, right? Jokes aside, but there is a lot of compliance of like who is issuing it, where the money comes from, all the banking processes that you can imagine. A lot easier than issuing an IPO and a lot cheaper. You're looking from rule of thumb 3 to 6 months.
Okay. And you're saying it's much cheaper. I guess it's going to vary a lot what the actual price is, but what's the kind of price range you usually see taking it from just an idea to an actual STO?
Yeah, we see ranges, south and north of $500,000.
Okay. Yeah, that's nothing.
And a lot of that goes to legal, right? And a lot that goes to legal. So I'll give you an example. If you issue a token that it's domiciled in Cayman, but you're selling it in the US, you're going to have to hire legal counsel in Cayman to issue the token, and you're going to have to hire legal counsel in the US to make sure that you're selling within the proper frameworks of the SEC's regulation for security tokens. So a good portion of where that goes south of 500,000 to north of 500,000 is legal work and where you are promoting and selling your token.
Sure. Okay, makes sense. I mean, this question might be a little bit difficult for you to answer, but if like we could imagine there are like hundreds, if not thousands, of businesses out there within the blockchain space who are all considering like getting some investments in to, you know, fund their project so they can do more marketing and yeah, they can get the word out and add more value. But I also think a lot of people are scared to onboard other investors, to go through all this legal work, all the hassle. Like, when is it worth it for somebody? Like, what kind of companies should be doing this?
It's a very good question. I think that you need to have some kind of critical mass to issue a security token, right? If you're issuing a security token and you have one pizzeria on the corner, might not be worth your time and money. You might just issue a utility token, and your utility token gives you access to free pizza on Sunday, right?
Mm-hmm.
And you sell it like that, and that's it, and you raise money that way. Now, we see a lot of security tokens being issued for intra-bank bonds, company debt structures, so companies trying to raise money through debt, real estate, like, you know, obviously if you have a major hotel or office building in the business district of Manila, then you certainly have the capital to raise money through a security token. So other things we've seen that are popular right now in our daily work with clients is Bitcoin mines. So people out there that want to raise money for their crypto mines, they know that it is expensive to set up a crypto mine. So it's kind of like that balance, right? How much money you need for your business versus how much you're investing in a security token, and balance that with how much you're trying to raise.
Okay, cool. Have you seen any kind of like traditional industries take on STOs? Thinking like, I don't know, like agriculture or fishermen or anything like that. Have you seen any kind of like alternative examples of this?
Yeah, I've seen some alternative assets that are traditionally illiquid going into this space. So I'll give you a couple of examples. So I mentioned BTG Pactual. They did one of the first global security tokens issued by a bank. They did it based on a group of commercial buildings that were distressed. And you guys can Google it. It's called REIT, BZ, like a REIT, like a real estate investment trust, and then BZ for Brazil, REIT BZ. So that's an interesting case. Another interesting case are the guys here from Wave in LA. They tokenized barrels of American whiskey. For those of you out there, I like whiskey. For those of you out there that understand whiskey, you know that a barrel of whiskey is a great investment asset because it evaporates, right? So the whiskey you put in there, after 15 years, 20 years, you take out a few bottles out of a barrel. So the price naturally increases of the liquid you put in the barrel. But that investment is highly illiquid. How do you sell a barrel of evaporating whiskey across the globe? So they did a security token fund for U.S. whiskey. So those are kind of like opposite sides of the spectrum, right? One is very traditional banking, real estate investment trust, and the other one is very liquid asset like barrels of evaporating whiskey.
Great. Yeah, that's a good example actually. Before we end this presentation and the call here, do you have some some projects or protocols or companies that you think people should keep an eye on in the space?
Yeah, for certain. Like FTX does a lot of synthetics, tokens that represent real assets. Binance is doing that. Solana is a great protocol that's looking at building better infrastructure for financial institutions to transact these tokens. Celo is also another great blockchain that's doing great work on stable coins. Hathor is one that I like very much as a blockchain. Those guys are doing a lot of great work with green and carbon credits, which is also a security token. Cartesi is also a very interesting blockchain. So, Polkadot, one of my favorites is Cardano, and I'm looking forward to seeing the Alonso launch and see how that unfolds. Yeah, they're doing a lot of DeFi protocols, very innovative stuff. We're advisors to a couple of DeFi projects on the Cardano blockchain.
Great. Well, thanks for those tips. Thanks for a good presentation as well, Alex. And on that note, to you guys at the Crypto Mastery Summit, you can find Alex on his website, 7ccinvest.com. Definitely go check out his book, the STO Financial Revolution.com, where you can use the promo code STOBookCMS and get the book for free. So again, Alex, thanks a lot for participating in all of this. And to you guys at the Crypto Mastery Summit audience, goodbye.